Hey guys, we're going to be learning about the accounting equation today. This equation has to do with your assets and liabilities and owner's equity. And it's just one of those equations that you're going to be using a lot in Accounting 1 and Accounting 2. But before we do that, let's go ahead and talk about what a service business is. So a service business is a business that performs an activity for a fee. An example of this is found in page 9 of your textbook, and it talks about the business Delgado Web Services. So this is the business that we're going to be talking about for our examples in the next several chapters. This business was created by its one owner, Michael Delgado, and what he does is he creates or designs websites and then sells them to different customers. So since he is performing an activity, which is creating a website and then selling it for a fee, that would be considered a service business. So some other examples of service businesses might be a hair salon, maybe a lawn service, like if you're mowing lawns for people. Also babysitting. There's all different types of service businesses. Okay, now let's talk about a proprietorship. A proprietorship is a business owned by one person. Sometimes it's called a sole proprietorship. And let's talk about the advantages and disadvantages of being the only person to own a business. So if you're the only owner of a business, you get to take home the full profit. You don't have to share it with anybody else. But at the same time, you're also responsible for all of the expenses and liabilities or bills that come up with the business as well, okay? The next vocabulary word is a business plan. A business plan is a formal document that describes the nature of a business. So most of the time, if somebody wants to start a business, they need to fill out what's called a business plan. And this just goes through what they expect for their business, what they plan on doing to make money, and just gives a good outline of what their overall idea of the business is going to be. Okay, now let's go ahead and go down to the generally accepted accounting principles, also referred to as GAAP. These are the standards and rules that accountants follow. So yesterday we talked about business ethics, and GAAP basically establishes what the business ethics of accounting are. They have a lot of concepts that help accountants make sure that they're reporting consistently and accurately. One of those is called the unit of measure concept. And what this is whenever a business uses the same currency throughout all of its transactions. For example, if a business is in the United States, then they would be using US dollars and not pesos or pounds. Okay, they want to make sure they keep all of their money in the exact same currency. The next concept is called business entity. And this is whenever you keep your personal records separate from your business records. So even though you would be a proprietorship or you are the only owner of a business, you still don't want to mix your personal finances with your business finances. You have to keep them separate. Okay, moving on to the accounting equation. So this is something you have to memorize, and even after years and years of taking accounting, someone should be able to ask you, hey, what's the accounting equation? And you should still know it, okay? All right, so the accounting equation is assets equals liabilities plus owner's equity Yesterday we talked about net worth and equity, and that's the same thing as owner's equity. So it's just the difference between assets and liabilities. Same thing as like net worth, what we were doing yesterday. And then if we want to go ahead and define the accounting equation, it's the relationship between assets, liabilities, and owner's equity. And something to keep in mind about the accounting equation, just like any other equation in math, it has to stay balanced. So your left side always has to equal your right side. Now we're going to look at some different transactions that affect the accounting equation. So let's go ahead and define transactions. It's activities that change assets, liabilities, or owner's equity. And then the record that summarizes these transactions pertaining to a single item is an account. So we have different accounts for several different assets and liabilities. For example, like cash, supplies, insurance, and the list goes on. Okay, this account also is given a title, which is the name given to an account. And then the account has a balance, which is the difference between the increases and decreases. And finally, our last vocabulary word is the capital account. This account is used to summarize owner's equity. So now let's go ahead and look down here at some cash transaction examples. Go ahead and turn in your books to page 14 and you can follow along in the textbook as well. So for transaction 1 on January 2nd, it says we received cash from owner as an investment. So remember that this is our business that we were talking about, okay? And the business is receiving cash from the owner as an investment. So let's talk about if we receive cash, what's going to happen to my cash? Is it increasing or decreasing? And that should be increasing. So my assets would be going up because my cash is increasing. What I want you to do is draw a line right here between assets and liabilities. Because remember, our equation is assets equals liabilities plus owner's equity. So we always want to keep the left side of the equation balanced with the right side. So whatever you do to one side, you have to do to the other. It's kind of just like algebra, okay? If you subtract 2x from one side, you have to subtract 2x from the other side. And it's the same in accounting. So our cash went up by $2,000, which means that our capital also went up by $2,000 as well. Okay, now let's look at the second transaction. So this time we paid cash for supplies for $165. So we paid cash for supplies. So if I'm paying cash, is my cash increasing or decreasing? And it should be decreasing. Just like if you go into the store and pay cash for something, you're losing your cash. So my cash would decrease by $165. But we're also gaining $165 worth of supplies. See up here how I have cash, supplies, insurance for all my assets. So this is an example of whenever you have a transaction that only affects one side of the accounting equation. It's kind of like a wash, okay? You spent money on cash, but you gained money on supplies. Okay, let's look at the transaction number 3. So on January 3rd, we paid cash for insurance. So same thing, we're paying cash, so my cash is going to be decreasing by $900. But I'm also gaining $900 in insurance. Insurance is actually an asset because it's something you own and you can use it whenever you need it. So this is another example of a wash where you lost an asset, but you also gained an asset as well. Okay, let's go ahead and come down here to this next vocabulary word, a creditor, which is a business or person to whom a liability is owed. So the NHS is a creditor because if you charge money to the NHS then they could be like your creditor because you owe them money. The account that keeps up with stuff that we owe is called accounts payable. So this is the account that records a liability. So we have two more transactions to look at. Transaction 4 says on January 5th, we bought supplies on account from Canyon Office Supplies. So this word on account is a big clue to us. We did not pay cash for them. We're actually charging to pay for these. So if we bought supplies, did our supplies increase or decrease? They should have increased because now we have more supplies. So my supplies increased by $220, but I didn't pay cash for them. Instead, I charged them on account, which means I now owe Canyon Office Supplies $220, which would increase my liabilities. So once again, go ahead and draw a line separating assets from liabilities and owner's equity. We want the left side of the equation to equal the right side of the equation. So since I increased the left side by 220, I have to increase the right side by 220 as well. All right, last transaction, woohoo. On January 9th, we paid cash on account to Canyon Office Supplies. So we're paying off part of what we owe to Canyon Office Supplies. So we're paying cash. So what should happen to cash if we're paying it? It should decrease. So my cash is going down by $100. And since I'm paying Canyon Office Supplies, I'm also decreasing what I owe them by 100. Okay? I'm paying off 100, so I want to deduct that from my total charge. All right, go ahead and get out that work together, and we're going to look at that as a class. All right, so for this work together, make sure you're on page 17 in your textbook. And we're going to show how each of these transactions affect the accounting equation. All right, so for transaction number 1, it says we bought supplies on account. So we actually don't even have any numbers. We're just going to use plus signs and minus signs. So if we bought supplies on account, I know that my supplies would be increasing, which is an asset. So my assets would increase. And my liability would increase as well because I charged them on account. Okay, next transaction. Received cash from owner as an investment. So if I receive cash, that means my cash is increasing. So my assets would be increasing and my owner's equity would be increasing as well, since that is an investment. If I increase one side of the equation, I have to increase the other side. All right, transaction 3 says paid cash for insurance. So this time, I'm paying cash for insurance. So cash and insurance are both assets. So this is like a wash. My cash would decrease, but my insurance would increase. So I have two things that affect assets, so they would both stay on the same side. And finally, paid cash on account. So if we're paying cash on account, my cash is decreasing and my liability should be decreasing as well. Okay, sometimes this one's confusing, but just think like if you pay off your NHS charge, your cash is decreasing and your charge is decreasing as well. So your asset and liability would both be decreasing. All right, now go ahead and get out this application problem, and I want to show you the first step. All right, so for application 1-2, all you're going to be doing is completing the accounting equation. So we're not actually doing what we just did in the work together, but tomorrow we will be, so make sure you keep up with that because there's more of that to come. So on this application, you're just going to be completing the accounting equation. It's just like a simple math equation. Assets equals liabilities plus owner's equity. If you want, you can draw this line again to help you remember that this is the left side, this is the right side, and they have to stay in balance, okay? So my assets equals my liabilities plus owner's equity. So if I know my assets and my liabilities, what would I do to figure out owner's equity? I hope you said subtract because that's right. So I would just subtract my liabilities from my assets, and that would give me owner's equity. So I would do 15,650 minus 11,475, and that would be 4,175. Alright, so all you're going to do is just fill in the blank for all of these. Each one is a separate problem, and then make sure you turn it in. Hope you guys have a great day, and we'll talk soon.